Today, the economy sure feels like the Las Vegas real estate sportsbook. And today, we talk about where to place your real estate bets. This is the November 2022 Las Vegas luxury real estate market update. So let's jump straight into the guard-gated numbers. For October, there were 57 closed sales, which is down slightly from 66. We have 73 pending sales at the end of the month, which is down from 89. And as far as homes for sale, there were 452 for sale at the end of the month, which is about the same as September. So what does that mean? Let's jump straight into our absorption rate chart and take a look. So once again, absorption rate is a measure of supply and demand. So basically, the number that you see in the absorption rate column will show you the months of supply we have for that general price point. Okay, and a 6-month supply, or a number 6 in the absorption rate chart, is generally a sign that that market is more balanced, and you would expect to see prices fluctuate less. Okay, so let's look at some of the segments of the market that appear to be performing better. 500,000 to 750,000 and 2.5 to 3 million both have supply numbers just under 6. So what that tells me is I'd expect to see fewer price changes among homes that are properly priced in those categories. Because you got to remember, there are still plenty of homes in that 500 to 750, as well as 2.5 to 3, that are just grossly overpriced in the first place, and they're going to see price reductions for sure. Now, when you look at the other segments of the market, you start to see numbers going over 6. You know, you see 7, 9, up to 13.8 months supply in the 2 to 2.5 million category. And then, once we get up to over 4 million, we see almost 30 months of supply. And what that means is those segments of the market are much softer. So that just tells us you've got more supply and less demand, or maybe similar supply and just less demand. Regardless, you're going to see more competition and potentially more price changes. Now, when it comes to lowering your price, we've got a few different types of sellers in this market. You've got those that, aren't necessarily that motivated to sell. If they don't get their number, they're not going to sell. And you got to remember, a lot of these sellers are locked in at these amazing low interest rates. Some are below 3%. So for them to sell and then go buy today with a 7% mortgage for a 30-year, there's going to be less motivation for some of these sellers. So some of them won't lower their price and will most likely just end up taking their home off the market at some point. Others that are more motivated, not desperate, just motivated because they've got, change in life plans, whether it's financial, perhaps it's a job relocation, maybe it's personal, maybe there's marriage, divorce, whatever reasons, people still need to move. And these are going to be the people that you'll see start to get more competitive with their price. It doesn't take a crystal ball to see a house that's sitting on the market for 3, 4, 5 months with no price change, that it's just not going to sell unless they change something, which is generally going to be the price. Now, upgrading and changing the house can have a positive effect as well, but most people aren't going to take the time to do that since that takes a while. So, what else is going on out there right now? We're recording this today on November 8th, which is Election Day. In the past, it's always been, an observation of mine that people like to sit on the sidelines to sort of see how things play out. So at the end of the day, whether the particular voters are happy or sad, generally the uncertainty is gone to some degree. They know what's kind of lies ahead, and they get back to whatever they were going to do, whether it's buy, sell, etc. But one of the bigger things that's really shaping the path of the market, the economy, housing prices, is the Federal Reserve and their fight against inflation. And one of the things that the Fed Chairman Jerome Powell continues to say repeatedly is that they are going to keep raising rates. And what does that mean? Well, without getting too technical, basically by increasing the federal funds rates, businesses borrow less, spend less, and generally causes businesses to contract on some degree, which could potentially lead to layoffs. Which means, the Fed, one of their tools in fighting inflation is actually to increase unemployment, with the reasoning being if there's less people that can buy things, then the price of things will go down. So look, there's a lot going on out there still. You got Ukraine, you've got new trade sanctions with China on semiconductor chips. So as I said earlier, it feels like a bit of a sports book. There's how are the odds going to play out on all these different events in the world theater at the moment? So when it comes to placing your bets, sellers, remember that buyers love new stuff, whether it's new cars, new clothes, or new houses. So the more your home looks and feels new, the better. And also, please do your best to not miss out on showings. These buyers are not always here for long, and if you miss your opportunity, they might not be coming back. Buyers, I know I just spent a fair amount of time talking about potential price reductions in the future, but just remember, not every home is overpriced. Some of the best properties out there are still selling quite quickly. So whether you're looking to buy or sell, you need a real estate professional in your corner to help you navigate the market. So give us a call at 702-442-1150.